Good morning. You're watching All You Need to Know on Bloomberg Quint. I'm Darshan Mehta. Let's first take a look at the global markets, and the carnage was clearly seen as far as the American indices was concerned. So the Dow is down almost more than 1,000 points in the last two trading session. It was down 2% overall. The Nasdaq was down 1.2%. Across Europe also there was heavy selling that was seen. You can see cuts of anywhere between 2 to 3% that came in. Asia surprisingly hasn't opened that weak. Japan has recovered from the lows of the day. The Hong Kong markets are trading with a positive bias. The S&P Australian markets are trading with a positive bias, and so is the SGX Nifty. It's come off the day's high, but nevertheless it is trading above the 10,300 mark in trade. As far as how did the ADRs pan out in trade, apart from Wipro, most of them had a weak start. So Infosys was down 2%, ICICI was down 1%. Wipro pretty much was the only ADR that ended with a positive bias. How did our indices pan out in trade? We were down 225 points on the Nifty, 2.5% cut across the board. That was something that you could see. Even the Bank Nifty was down over 2% in trade. It was down 2%. The big cut came in on the Nifty PSU Banking Index, which was down over 5% in trade. As far as some of the sectors that were concerned, metal, IT, and pharma. These were the three worst performing sectors in trade yesterday. How did the week pan out in trade? Some of the sectors that did well include media, the oil index, as well as the Nifty Bank. And the sectors that managed to disappoint this time around included sectors like the real estate, metal, and the IT pack. Now, overall, if you're looking at the fund flows, FIs were net sellers, DIs were net buyers, but overall on a month-to-date basis, it pretty much evens out between themselves. Among the Nifty, if you're looking at it, the Nifty was down 225 points. Some of the PSUs managed to come up, and watch out for the oil marketing companies again, because crude has cooled off significantly. But the HDFC Twins, TCS, SBI, all the heavyweights contributing negatively to the Nifty. Now, as far as the Nifty on the future side is concerned, you saw open interest drop of hardly anything, but the Nifty was down 2%. The Bank Nifty saw open interest drop of 20%, indicating that all the longs were unwound and the index was down 2%. Now, as far as where positions are taken, 10,000 continues to be the big support for the market. The total open interest there is almost 37 lakh shares, and the total resistance has moved from 11,000 to 10,500 now. We are at this level, about 10,300 call writers are active, and below 10,300 the put writers are very, very active in trade. So it's a range bound trade that we're looking at as far as trade is concerned. But yesterday put call writers were much more aggressive. They wrote in from levels of 10,200 right up to 10,600, and put writers were forced to shut position because of the massive downflow that happened in trade. IDBI Bank is the only stock in the FNO ban. As far as the PCR is concerned, it was negligible for the Nifty, but a big cut coming in on the Nifty Bank, since the Bank Nifty cut actually had a lot of short positions. As far as the couple of stocks that I want to highlight, Voltas is seeing fresh shorts for the past few days on high open interest build up of 9%. The other counter is NIT Tech. Mid-cap IT as a space is seeing selling pressure. This one saw open interest build up of 10% on the short side. The third stock that I want to point out is the HPCL. Short covering was seen on the oil counters today. Again, all the oil counters will be in focus as crude has corrected significantly. And the last stock that I want to talk about is MCX. Open interest build up of 7%, and the index and the stock moved up 7% in trade. So these are all the domestic cues. Let's go across to Paul Allen for all the top international headlines.
OPEC says the world will need 900,000 fewer barrels a day of its oil next year due to a weaker economy and higher output from rivals, including US shale. The cartel and its allies are under pressure to pump more crude to offset looming US sanctions on Iran and the collapse in Venezuela. US stockpiles posted a third straight gain last week, and West Texas crude saw its biggest two-day drop since May. The troubled F-35 fighter jet has been grounded after a first crash prompted inspections. The plane crashed in South Carolina last month, and the Pentagon says the grounding is to allow a fleet-wide check of a fuel pipe. The F-35 is the most expensive US weapon system, and more than 320 jets are operating around the world. Lockheed and the Defense Department are struggling to resolve more than 900 deficiencies. The aborted launch of the latest Soyuz rocket left 2 astronauts unable to report for duty at the International Space Station. The booster malfunction means potentially lengthy delays for other crews as well. Soyuz has been the only way to reach the ISS since the Space Shuttle was retired in 2011, but the rockets are likely to be grounded until a full investigation has been completed. Prosecutors in New York City abandoned part of their sexual assault case against Harvey Weinstein after revelations that a detective coached a witness to stay silent about evidence casting doubt on one of his earliest accusers. Weinstein is still accused of raping an unidentified woman in his hotel room in 2013 and of performing a forcible sex act on a different woman in 2006. He denies any wrongdoing. Global news 24 hours a day, on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Paul Allen. This is Bloomberg.
I mean, the markets are way up over what they were. It's a correction that I think is caused by the Federal Reserve with interest rates. The dollar has become very strong, which, frankly, people can debate whether or not they like a strong dollar or not. The dollar's very strong, very powerful, and that causes a little difficulty with doing business, frankly. Strong dollar doesn't necessarily mean all good, but we do have a very strong dollar. And we have interest rates going up at a clip that's much faster than certainly a lot of people, including myself, would have anticipated. I think the Fed is out of control. I think what they're doing is wrong. Under the Obama administration, you had a lot of help because they had very little interest. You know, when you talk about economies, our economy is far better than that, but we're paying interest, and they weren't. They were using funny money. But I think the Fed is far too stringent, and they're making a mistake, and it's not right. And it's, despite that, we're doing very well, but it's not necessary, in my opinion, and I think I know about it better than they do, believe me.
Mr. President, after what happened with the Soyuz capsule...
No, I'm not going to fire him. I'm just disappointed at the clip. I think it's far too fast, far too rigid, far too fast.
We are not happy, even for the slide which has taken place. It's not to our mind justified by the fundamentals. Our current account balance is not very large, though it's touching, it crossed 2.4% in the first quarter. I keep on saying that 2% current account deficit is healthy for us. It brings that international capital to us, and therefore increasing beyond that some cause of concern. But we have capital account flows. Our FDIs is doing well. It continues to do, even this current year also is doing well. So we are usually able to finance the current account deficit by the capital account movement. Last year we, in fact, added about $44 billion to our reserves. But sometimes it changes. So this year that other part of the capital account is not behaving the way it did last year, portfolio investments and all. So there's been some, but I think we have a reasonable amount of reserves and other measures. So but can't be happy.
Absolutely. So the thing is, you're not happy about it, but do you think the government and the RBI should be doing more to stop the slide? So there are international factors, the global factors, which cannot be completely controlled. Even from pure economic point of view, if other currencies depreciate, relatively Indian currency is also depreciating is not bad from the competitiveness point of view as well. So there has to be some thing in alignment with what's happening globally. But so, for instance, we had the RBI did stand pat last time against the majority of economists who were suggesting that it should be raising rates. Some were even suggesting 50 basis points. Do you think that there was an opportunity that was missed?
No, I don't think that was the case. The principal monetary policy anchor for the Reserve Bank is the inflation. Inflation was well in control. It's much lower than 4%. And therefore, raising rates for the purpose of inflation management was not required. And therefore, that was not, some analysts were trying to use this instrument for rupee value. That's not a very healthy instrument for that purpose. It affects equity markets differently than the debt market, and even debt market is not that big compared to our equity market. So rupee would have got affected by any such action is not very clear. And this is not the instrument available. There are other measures which need to be taken.
Such as? like what the government also did, try to deal with current account itself by reducing import or discouraging the imports of non-essential things. Some measures were taken to allow capital account flows to oil companies. $10 billion were allowed.
We had a commentator on earlier who was congratulating India and Urjit Patel for not raising rates when everybody else, seemingly, with a few exceptions, are at the moment tightening. And he was suggesting, it wasn't quite the analogy he used, but he said eventually we'll see where the emperor's new clothes are.
No, India did raise the rates twice. It's not that it was not. And we do monetary policy action every 2 months. So it's not that every time you do it. So it's not necessary to do.
I think it was not too long ago, last time around, that you were listed as potential currency manipulators in DC. You weren't, admittedly, at that stage, called one. Are you worried that that's going to happen this time?
See, that is because US has a certain criterion, which is not, I don't think, is a very good way to measure whether somebody is doing anything with the currency. A $20 billion trade deficit, some operations, if you do more than 1%, as your, we have never done those operations. If there is such a distressed sale of dollars, as was the case last year, they has to be bought, otherwise there is disorderliness in the market. So the Reserve Bank becomes a default buyer of the dollars when everybody wants to offload dollars in India. So that was not currency manipulation. So it met 2 criteria out of 3. So mechanically it was listed as one where they will monitor. This time when the new edition comes, the criteria would not be met. So we would be off it. But they have to keep it for some time, so they will continue to keep it for 6 months or so. So that's mechanical process. I'm not worried about it.
Secretary, a final question here. What do you think is the biggest risk to the global economy right now?
Global economy, I think the biggest risk are a couple of them. Oil, of course, the way we manage oil. Oil going to 25% was not also healthy for the global economy. Oil going to 85 is not. So this kind of irrational pricing system of the oil still continues to be, though it's now losing that kind of thing. It's not growing in consumption overall, right? So this kind of volatility in oil prices is the one. Trade in general, our entire global system is based on a global value chains, investment, trade and all. So that system is needed for growth of the developing economies and consumption everywhere in the world. So that's another. And lastly, to my mind, this financial system tightening, which affects everyone. So these 3 things are, to my mind, the threat to the global economy.
Let's now look at the commodity space, starting off with oil prices, which have seen a more than 5% correction in the last couple of days. Overnight as well, we saw oil prices dip the most in about 8 weeks on the back of investors avoiding risky assets. And on the back of this, we had a 3% fall in the WTI crude oil futures. And now, what actually supported the fall was also the EIA reported inventory buildup of more than 6 million barrels for last week, which was more than what the analysts were anticipating in a Bloomberg survey. Shifting focus to the base metal space, most of the main metals in fact closed mixed on the London Metal Exchange. And now what has actually kept the metals at bay is the increasing trade war tensions, which have offset the bullish sentiment on the London Metal Exchange. Copper in fact erased most of its losses, and nickel was flat in trade. Lead in fact snapped its 6-day losing streak and ended about 5% higher, while aluminium extended its decline to 6 days in a row now. And if you look at the Shanghai Futures Exchange, the base metals are in fact trading on a mixed note as well. Lastly, talking about gold prices, we saw a sharp uptick over there as well on the back of the slump in the equities that we saw in the US market. And in fact, the gold prices posted their biggest gain since June 2016.
Well, a bunch of news that we're tracking this morning. I'm going to start off with the results first, where GM Breweries has reported strong set of numbers. Top line growth, we're looking at a 10.5% uptick there, and in terms of bottom line, it's a 24% growth that the company has clocked in. Looking at the margins, there has been an expansion year-on-year basis for the company. We are looking at a margin of 27% as compared to 24.6% that was registered in the corresponding quarter of the previous year. However, on a sequential basis, there seems to be a bit moderation, given that in Q1 the company reported margins of around 30-odd%. Also, if you look at the second stock that we are tracking this morning, Sundaram Clayton, where the company has inaugurated new foundry with an investment of around 150-odd crore, which is expected to take up the capacity of the company significantly higher from the present levels. Also in our list is Union Bank of India, which is expected to raise around 700 crore from the stake sale in 6 firms, and the bid has been invited, and the last date for the bid is October 30. The 6 firms where it's going to be selling stake is NSE, where it holds around half-odd%, less than half-odd%, 2.8% each in NSDL and NSDL e-governance, and SIDBI, where it holds 1.95% stake, 1% in CCIL, and around 4.15% stake in GM Financial ARCs. Apart from that, we are also looking at United Breweries, where the CCI has conducted raid in the top 3 breweries companies with regards to the price fixing investigation. Also in our list is Fortis Healthcare, where Shivendra Singh is now willing to pay around 3,500 crore of dues towards the settlement of Daiichi case.
Sorry?
IT major TCS came out with an encouraging set of results on Thursday. If you look at the revenue grew at 3.7% on a quarter-to-quarter basis in terms of dollar revenues in constant currency terms, which is much better and ahead of the street expectations. The company is now guiding for double-digit growth for the entire FY19. In Q2, it had 11.5% growth on a quarter-on-quarter basis for dollar revenues, and that too in constant currency basis there. As far as margins are concerned, the margins came about 26% after 7 quarters, and at 26.5%. Now, company is guiding that it will manage to be within the band of 26 to 28% in guidance if the currency tailwind continues going into the end of the financial year. Apart from that, the company also saw good amount of demand coming in from 2 key geographies, which is Europe and North America. In North America, it grew 8% on a quarter-to-quarter basis, and that is giving a company a good encouragement in terms of the kind of demand which is coming from there. Not only that, BFSI and retail are also 2 categories which were sluggish whole of last year, which has now seemed to have come back, with BFSI growing at 6% and giving the company the boost as far as revenues are concerned.
HUL will report its numbers today. As far as the top line is concerned, we are seeing a growth of 13%, 15% growth on the bottom line. And as far as the margins are concerned, we are seeing margins of 21.2% versus 20.2%, so close to 100 basis point improvement in margin. Volume growth will be important to watch. We are seeing a volume growth on expecting them to grow at 8 to 10% versus on a base of 4%. The volume growth will taper off given the fact that last quarter the volume growth was on a base of a flat growth, so it was on 0%. So this time around, because of a higher base, the volume growth is expected to be taper. Home care and personal care segments will see double-digit growth, while the food and refreshment segment will see high single-digit growth. Gross margins will go off higher because of price hikes that they have taken, premiumization that they have done. Margins will also improve because of those reasons. Margins will also be aided by the cost control measures that the company has taken this time around. What do you watch out for? Volume and growth trajectory. What's the outlook that they have? What is the pace of rural recovery? And what's the progress for Lever Ayush? And that's something that we need to monitor closely.
The government has increased customs duty on various communication equipments to 20% from 10% currently. The customs duty on items such as smartwatches, optical transport equipment, and VoIP or Voice over Internet Protocol equipment, amongst others, have been hiked to 20% from 10% currently. The import duty hike comes into effect from today or October 12th. The government has also removed exemptions on printed circuit board assembly of optical transport equipment and various other items, and has levied a customs duty at the rate of 10%. Remember, this is Indian government's effort to curb non-essential imports to prevent a further widening of the current account deficit and stem the fall of the rupee.
Let's now show you the top 3 stocks to watch based on the delivery buying and selling as of yesterday. The first stock on the list, now that should be Interglobe Aviation, which is up about 2.2% and saw delivery buying of 132 crores. The delivery volume surged about 130% as compared to a 99% surge in the total volume when compared to its 5-day average. Second stock from the banking space, State Bank of India, which was down nearly 6% in trade and saw delivery selling in excess of 500 crores. The delivery volume was more than double the total volume when compared to its 5-day average. Last and final stock, HCL Tech, which was again down about 4% in trade and saw delivery selling of nearly 200 crores. The delivery volume was up about 70% as compared to its total volume shooting up about 67% when compared to its 5-day average.
There's lots to talk over the course of the day, and you'll find all the live market action on Bloomberg Quint. There is also a few stories that you should consider reading on the website bloombergquint.com. Here they are. The Institute of Chartered Accountants of India has constituted a 9-member panel to study the systematic issues in the IL&FS crisis. More banks will join State Bank of India in increasing their planned purchase of assets from non-banking financial services companies, according to a senior government official, and amid concerns over such lenders' ability to refinance market debt. That's all you need to know going into today's trade. Up next is Indian Open, so stay tuned to Bloomberg.